Thank you, Phil. Certainly food for thought on the IP versus or TPD argument. Our third speaker today is Geoff Street. He's calls himself an independent consultant, but he's also fessed up that he's only been out on his own for a grand total of 6 weeks. Prior to taking this step, Geoff was the insurance and claims manager for Superpartners. That area processed something like 9,000 claims and 50,000 insurance applications a year and employed 160 staff. Geoff claims he got into the insurance industry by accident in 1978. I don't know whether there's a link between the word accident and the word insurance, but he joined AXA as organisation and methods manager in Perth. He transferred to Melbourne and then Sydney in a succession of senior roles. The last role he held was General Manager Operations at Australian Casualty and Life, a risk insurance subsidiary of AXA. After 18 years at AXA, he moved on to Norwich Union for 4 years as the General Manager of Operations for the risk and personal savings area, and then had a stint at Macquarie Bank, where he was an Associate Director and State Manager of the Financial Services Divisions for Victoria, South Australia and Western Australia. Prior to joining Superpartners in February 2005, Geoff spent 3 years in a consulting capacity, working mainly for the Australian New Zealand Institute of Insurance and Finance, where he rewrote their life insurance diploma and ran their branch operations internationally. Would you please join with me in welcoming Geoff Street?
I'd like to start with a word of warning about consultants, because I may well turn up on your doorstep unannounced. Proceed to tell you something you already know. Pretend I know everything. Proceed to show that I know nothing about your business, and then charge you an obscene amount for the privilege. So just a word of warning about consultants. I'm going to pose 2 questions today, and you may find them controversial. First of all, I want to look at the challenges ahead for administrators. We've seen what's happening in the group insurance market from the previous 2 speakers. I'm going to add my 2 pennies to what Greg and Phil have said. But I think you'll all agree that there are challenges ahead if everything comes to fruition. And look at some possible solutions that may help the administrators deal with what's about to hit. And I hope, if nothing else, I can provoke your thinking. First of all, I've got food for thought as well. The first thing is that, as far as my view of the market is concerned, it is changing. There's no question it is changing. When I looked after C-Bus at Australian Casualty and Life, the product looked completely different to what it looks like today. There's been gradual change, but all of a sudden, I think we are seeing very, very rapid change, particularly in the environment of the industry funds. The big shift from my perspective, I guess I describe as being a shift from vanilla products through to much more complex products. Covers are increasing. We're seeing defaults generally doubled in recent times, and automatic acceptance limits increased quite considerably. Greg put some figures up about the group premiums. I saw some figures recently that track the history of group premiums. And I'm here to tell you that they have quadrupled in the last 10 years. If you go back 10 years ago, we were talking about premiums in the vicinity of 440 million. We're now talking about premiums in the vicinity of 1.8 billion. So they've quadrupled in the last 10 years. Okay, so what are these changes I'm talking about? Well, we've touched on some of them. Fixed level cover. We never heard of fixed level cover 10 or 15 years ago. The only option you had was a unit of death and a unit of TPD. Own occupation TPD wasn't dreamed of or dreamt of 5 years ago. We're now seeing some funds introducing own occupation TPD. We're seeing death cover up to age 70. Long-term IP. We were seeing long-term IP introduced into funds even before the tax office gave their ruling fairly recently to allow the deductibility of the premiums. When I go back 10 or 15 years, you wouldn't dream of excluding or loading a policy, a group policy. You know, if you didn't want the default cover and you wanted a bit extra, if you can answer these 4 questions, then you can have a bit extra. But if you can't answer them, you can't get it. So there was no such thing as exclusions and loadings. I guess the reality is that the group market is morphing into the retail market as I see it. And the products that we see in the group arena now mirror those that you can buy in the retail area. There's another workshop later in the conference about underinsurance, so I won't talk too much about that. But one of the statistics that I saw that really, really shocked me about underinsurance was that 60% of families with dependent children have less than the equivalent of 1 year's living expense in their insured. So, for example, 60% of people with dependent children have probably got less than $40,000 worth of life cover, which is an absolute travesty and potentially a tragedy. I mean, you relate the word, and I think Phil touched on it, apathy equals insurance, I guess. I mean, how many times have we heard that I don't need insurance? Or even worse, the guy that says, I don't need insurance and I don't want it, because when I die, I want it to be a real tragedy. Okay, further food for thought. With the abolition of the RBLs and the other things that are going on, the tax deductibility of long-term IP, the realisation about the underinsurance problems, I think we could see another quadrupling of the premium. We've seen a quadrupling in the last 10 years. I predict we could see a quadrupling again, but in the next 5 years. Now, if you do your maths, or your math, as the Americans say, we're talking about $7 billion worth of group life premiums, which is quite mind-blowing. Will IP be the default cover? I think there's certainly, like Phil, I agree, there's certainly a place for IP cover, but maybe I don't actually personally believe it should come before TPD. I think the sort of hybrid products that are around are probably the solution to it, that you can have a hybrid of TPD and IP. But certainly there is a very, very big place for IP, and we're going to see more and more of it become a reality. A few other things that may occur. Lifestyle, what I call lifestyle events cover. We're seeing people talking about potentially putting clauses in their policies that allow cover to be increased when a member has a lifestyle event. And I mean by that, they get married, or they have a child, or they buy a house. It gives them the right to additional insurance. So that's another potential that I see may happen. This is controversial. I think there is room for limited trauma cover under superannuation. And my selling proposition is that if you suffer a trauma, your ability to earn at the level that you would have earned had you not suffered the trauma could ultimately affect your account balance. So limited trauma cover could actually be used as a top-up. I know that the trustees can't pay it out, but there's no reason why the amount paid out under the trauma couldn't be paid into the member's account. A lot of people disagree with me on that, but I can't see. I think there is a proposition there. The only trouble is we've got to talk, I guess, get the tax department to agree that the premiums are then tax deductible, which I don't think has yet happened. And probably the most controversial point that I guess I'd make of the day is that mega funds could become their own insurers, maybe with reinsurer or a big insurer's support, and with the help of the administrators. Have you got indigestion yet? Well, my view is that if the administrators don't wake up to what's going on, they may well wind up with indigestion. I think we need to look at the two main processes within the insurance world, and their underwriting admin and claims admin. How good are they? How could they be better? You bet your life they could. Let's look at first of all the challenges that are presenting at the underwriting administration area. There's many more cases now having to be underwritten. As more and more people go above the automatic acceptance limits, there's more cases that actually have to be underwritten. So that in itself presents additional work. The squeeze on premiums, and while Greg is saying that the business is profitable, there's no question about that. My experience has been that the insurers are looking much more closely at cases now. So there is more work going into actually underwriting the cases. So the squeeze on premiums, and I put it down to the squeeze on premiums, means more scrutiny by the insurers. Have anybody ever tried to draw up the process map for processing a new business insurance application? You should do it sometime, because it's quite an eye-opener. The process can be tortuous. I'd have to say that I have had as many complaints from fund CEOs and senior insurance staff at funds and from members about the tortuous process of getting a life insurance application accepted. And it's not just at the insurer's end, it's at the administrator's end as well. And I guess the last point I make is that if my view of the world comes to fruition, and there is a fourfold increase in insurance coming through the industry funds and the large funds, will the administrators cope with a fourfold increase? Now, as far as the solutions for underwriting admin, I'm aware of two systems that are in existence for an online expert underwriting system. My belief is that the online underwriting system should be hosted by the administrators. The view that I formed, the reason I formed that view is that if you deal with 5 or 6 different insurers and they all have their own expert underwriting systems, and you've got to interface with 6 different systems, then it makes the whole equation quite complicated. Electronic exchange of information when it does have to go to the insurers. We still see too much going via snail mail. In my view, mail rooms are a curse in the whole process. If you look at how much time pieces of paper float around mail rooms in the course of processing an insurance application, you'd be horrified. And perhaps there's a place for underwriting authority at the administrator end, so long as they're actually prepared to employ competent underwriters. What about the challenges at the claims administration end? Again, I believe the squeeze on premiums has made the processing of claims a bit more difficult. I think the costs associated with claims and the cost of staff, claims assessors, the value of claims assessors has probably gone up 30% in the last 18 months or so, or the cost of claims assessors, not necessarily the value. The cost of claims administration staff has increased significantly. And then, of course, we have the litigious society that we're in, and the cost of litigation is also much, much higher these days. We have the constant readjustment to the definitions. Phil touched on this. What would deem a person TPD 5 years ago may not necessarily be the case because of advances in medical science. So you have to have a constant readjustment to how you view particular claims. Here's another controversial one. My observation has been that whilst the claim staking exercise, that is the 28-day letters and looking for interdependent relationships, was absolutely vital, it is my view that some trustees have taken this too far and have actually made the death claim process much more complex than it necessarily has to be. I think one of the worrying things about claims processing is that there really isn't a standard industry benchmark that people can aspire to, because every claim is kind of unique. But my observation is that I don't think that there's been a great deal of improvement in turnaround of paying claims in the years I've been in the industry. Okay, what about some solutions on the claims side? Again, I think we need to make use of electronic exchange of information. If we're sending stuff to the insurers and getting stuff back, it needs to go straight from one workflow system into another workflow system, not onto a piece of paper, into an envelope, into Australia Post, into the mailroom, sorted by the mailroom, and through that tortuous process. I believe there's room for streamlining the successfully process by putting more of the work into the administrator's office and gathering more information up front. Superpartners successfully installed what they call their streamline process, where they employ claims assessors to do an initial assessment of the claim. They don't make the decision, but they gather all the information. It saves all the backwards and forwards to the insurer. There's a place for case management where a particular case is assigned to a person and they see it through from go to woe. And also set client expectations up front. A lot of people think when they lodge a TPD claim, it's like the same as when they lodge the claim for bingling their car, that they're going to get it fixed up in a couple of days. We need to ensure that members' expectations are properly managed right up front. best practice for claims, as I've said, case management. The other thing is that there are specialist medical organisations out there that specialise in gathering medical information. They seem to have got the knack of getting past the receptionist at the doctor's surgery when they need a doctor's report, and I think there is a place for using these sorts of services, both at the claims end and at the underwriting end. And I guess I'm saying there perhaps less pondering on some of the interdependent relationships with death claims, and I think there's a place to promote binding death nominations a lot more too. The more binding death nominations we can get in place, then the less hassle we have at claim time. Okay, what next? Administrators need to show that they see what is happening and what is coming, and make sure that they've got the tools and the resources to be able to cope with it. And secondly, they've got to check what they actually charge for insurance services. If they haven't moved the cost of their insurance services, if they're still charging whatever it is, 2 cents per member per week for insurance charges, then they probably are undercharging for the work that they're doing. Now, I've probably posed more questions than I've answered, but isn't that what a consultant does?
We do have some time for questions, and so I'll throw it open. I'd encourage you to take advantage of the opportunity to get some wisdom from these three gentlemen who are clearly specialists in this area. So can I throw it open for questions anywhere?
Yeah, Rod Berry from RGA. Question for Phil. Phil, of course, I know you guys do a lot in IP. Probably a few of the practical issues that you might have skimmed over and maybe get your comment on, particularly with the growing in casual staff, of course. Determining the appropriate level of cover is difficult with variable earnings and at claim time determining the level of offsets, etc. How are you coping with some of those practical issues?
We on? Yep, we are. Good. Thanks, Rod. That's a fair question. I mean, obviously at the lower end of the earnings scale, that does always present issues with income protection, or at least it's seen sometimes as doing so. I think there are a number of answers to that. We have a great many plans in place where we provide top up to workers' compensation and take into account some of the social service provisions that are around. I think it requires more work than obviously a white collar or a higher income earning group. But I think with a degree of knowledge of the client, finding out the details of the likely people to be insured and their incomes, we can hopefully devise a plan that provides an additional benefit for them than what they're going to get from Social Security. And obviously the premium is appropriately weighted down. It's even though there might not be a huge additional benefit to these people, there is also not a particularly great premium. So at that end of the scale, you get the balances of two. But, I acknowledge without any question that that's a difficult part of the market, but I think there's still very much a benefit that can be provided.
Thank you.
Scott Smith from Legal Super, and I guess to either Greg or Phil, the issue around the group salary continuance versus TPD, and whilst I think there's a place for both, it's becoming quite clear that income protection is very important moving forward. But I guess it's always been traditionally the hardest type of insurance to get, both from a cost and underwriting point of view. From either of you, what are you seeing happening there to, I guess, make that easier and quicker to get in place?
Well, I'll start off. The answer to that one is that, certainly in the past it has been. And I think that that's one of the things, as I alluded in the presentation, that insurers need to address. We have certainly addressed that. And I think that, in most of the cases, if it's entered into on an opt-out basis, as I referred to there, we're able to provide benefits free of underwriting in most instances. That's obviously not always the case, and it's not always the case that a client wants to or is able to put it in on an opt-out basis, in which case we may well be looking at some level of underwriting. But I think, again, we've gone to great lengths to try and minimise that, and then to make the underwriting when it has to occur as seamless and as easy for trustees and members to manage as is possible. So I think it really gets back to the individual, looking at each individual plan. Yours is obviously a white-collar, dare I say, more highly paid industry than some others. We look at that differently. You may not want quite the same types of benefits as others, but at the end of the day, I think we can provide something that minimises that underwriting requirement, if not eliminates it altogether. And as I say, for what's left by way of sophisticated IT and good service, eliminate the real problems that have been there in the past.
I'd sort of add to that. Certainly, I think there is definitely, as you said, a role for death and TPD and income protection cover going forward. We may well see them all form part of a default. I guess it is, as you said, a higher expense to put income protection cover in place, but it also pays substantially more benefits, a much easier test. So we have seen historically problems with TPD where it takes 6 to 2 years perhaps to determine that claim, yet the person doesn't necessarily have an income stream coming through that door. So it certainly has a support role in changing a focus from permanency to in fact one getting people back to work. I guess in terms of to simplify access, we've used a couple of strategies where it's not appropriate for the fund or the fund feels it's not ready to move to incorporate that as a default. We certainly have used a strategy of that package choice that we've talked about, where a member joining the fund may get allocated death and TPD cover as a default, but on filling out their application the first time, they would get the opportunity to take up income protection under automatic acceptance at a proper level, so they could nominate their salary level. And provided that's done within an appropriate window, then automatic acceptance would certainly apply there. So that's certainly one strategy we've found that has been appreciated by a number of funds. And I guess another aspect to your fund that might be worth considering is that you may find in that industry a lot of employers may carry income protection cover as an employer arrangement. And again, there's still perhaps an opportunity for fund employers to work together to bring that cover potentially inside the fund, which may have some benefits for the employer as well.
We have time for one last question. Yes.
This is just a question directed towards Geoff, I think. Geoff, you raised the possibility of making binding nominations compulsory, I think, or encouraging their use. Just like to suggest that maybe all death benefits should be paid to the estate. And I've got some reasons for saying that. I think this whole process is convoluted, complex and time-consuming. And at least paying it to the estate, you're putting all the assets of that person together, and then it should be their will that's used to determine where it goes. Now, I know there are all sorts of issues that can be raised, such as protection from creditors, probate, and there are more. But I think if you could sort all those things out, it would produce a better result if we had these things travelling via the estate to wherever they've got to go than via the processes we have right now.
In my experience, the paying it to the estate is the last resort, and the reasons given for that are that basically the trustees have a responsibility to get the money into the hands of the people who are deemed the most deserving of those monies. That may not be reflected in the will. The will could be way out of date, and it would be, I guess, seen as a cop-out by the trustees by paying it to the estate. I'd like to see binding death nominations working more extensively, and I can't ever see a situation where it would be automatically paid to the estate, because I think the trustees would be actually abdicating their responsibility, would be my view. But I understand where you're coming from, because I know how difficult it is. We've seen death claims taking years to resolve, and no death claim should ever take that. A death claim should be paid in weeks or months, not years. I know where you're coming from, but I don't think it'll ever happen.
And I should add, from the Tribunal's point of view, thank you for that question, because we're doing some work on that area too, because death benefits are our largest area of business. That takes us to the end of this session, and I would just like to acknowledge our Platinum Industry Partner, Bridgewater, who have full speaker and chair gifts, as you're aware. this conference made a donation on our behalf to Oxfam, and I'd just like to acknowledge that. And could you join with me in thanking all of our speakers for a very lively and thought-provoking session? Thank you.